Hello, everyone. Long time no see. There's gonna be a point in everyone's life where you're gonna have to take care of the well-being of your family, health-wise, and things of that nature. So that's basically what I've been doing recently, and trickle that in with some death, unfortunately. But aside from that, you just have to keep pushing and yeah, that's basically why I was gone. So in today's video, I'm gonna give you guys like a bit of a recap. I know it's earlier in the day. I want to give you guys a bit of a recap. I haven't been around for weeks, and I hope you guys are doing well, and I hope we still have trading accounts to play with. So I'm gonna go ahead and go ahead and explain the SP500, the NASDAQ, the Russell, the dollar, the bonds, the yields, all that good stuff, right? And hopefully tomorrow, most likely tomorrow, I'm gonna try to start going live again and get back to the same schedule of making the daily trading recap videos and all that. All right, so let's get started with the video. All right, number one, let's take a look at the earnings calendar for this week. So we have AMD earnings today after hours. This is definitely going to affect the other chip stocks, the NASDAQ, and obviously Nvidia. All right. Then, so one thing I want you guys to take into consideration is that the majority of these stocks are all economically sensitive companies. So the IWM is going to really be affected by these earnings. So what usually happens prior to earnings is there's an earnings run up. So that is one of the reasons why the IWM is doing well today, because a lot of these companies have earnings. And then the big name right behind my head is Apple. Apple is reporting earnings Thursday after hours. So that is also going to definitely affect the market. So this is just earnings. Let's take a look at some more information. All right, so this is forexfactory.com. We are looking at the news for this week. So tomorrow, November 1st, is the first of the month. And November is historically one of the strongest months, right? So we have FOMC statement and the FOMC press conference tomorrow at 2. So what I'm expecting, let me go ahead and show the chart. So what I'm expecting is the market should not be making any big substantial moves today. And one of the reasons is the VIX. Okay, so I'm going to be jumping around a bit here, but when the VIX trades above 20, and so first of all, when the VIX is above $20, it is very, very difficult to be bearish on the market. Okay, because the put premiums on your contracts when the VIX is above 20 become less profitable. So if you guys remember, when we do day trade, there are times where the puts don't pay as well. When the VIX is trading above 20, the puts don't really pay as well. So what does that do to people that are buying puts up here? So let's just take a look. So the VIX is high and the market is bearish. What happens to the people that buy puts during this mesh up? Their puts do not pay that well on the moves that do go in their direction. And then when they go in the opposite direction, they lose even more money. So it's very, very difficult to do so, especially when this correlates to market bottoms. So you can call this a market bottom. This is definitely not a top. Okay, so this is definitely not a top. So going short when things are very, very overextended, when puts are not going to be paying well, is super, super risky. Day trading wise, day to day, you guys know that there's times where we trade, the puts don't pay too well, but they keep on pushing it in that direction regardless, down, 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 down. And then eventually the contracts just end up at 50%. So there's instances of that, but I'm talking about on the macro, not really macro, but on the larger time frames of the daily time frames, where there are supposed to be just the daily level, not on the 1 minute candle. Okay, so you can't really be that bearish on the daily time frame or the larger time frames when the VIX is above 20 because it's not going to pay the puts that well. And it's the perfect opportunity for them to rip it up. Not just rip it up, it is the perfect opportunity to make choppiness because they're not going to rip it up. They don't want to support bears. And they also don't want to allow bulls to profit too much either. So what they're really going to look to do is they're going to try to keep this as stagnant and choppy as possible. And I'm expecting this choppiness to continue until after tomorrow. So tomorrow is that FOMC statement. And I am expecting us not to really rise too much today. Tomorrow is a new day. We could see depending on where we open and everything. But today, I don't really think the market should do too much. And but all eyes are going to be after tomorrow. So here are my initial thoughts of basically what could end up happening tomorrow. First, let's take a look at the bonds. So this is a chart of the 20-year bonds. And we know that if the bonds are falling, then that is generally good for the overall market. Okay. And now we need to see everything that I'm going to be looking at. We need to see if there are bullish or bearish market structures in everything that's being shown. So right now, the yields, this is a pretty important position for the yields, but this is, it's essentially we're holding support. All the other time frame yields, the 10, the 5, the 30, things of that nature, they're all somewhat similar. So this is not really the most bullish scenario because we see these big red candles, and it's not the best case scenario for a continued move up. But especially as we come close to these levels of resistance, we fail, we wick, we fail again, etc., etc. And this entire time, we haven't made any new lows. So we've been chopping within this range, and the range is basically just becoming smaller and smaller. So this is not really the price action that you want to see in a very, very bullish setup. And that's why I'm saying, today or tomorrow is going to be very, very important. And it just so happens that tomorrow is FOMC. So that is, if this setup was happening any other time, I would say that either today or tomorrow, there needs to be a big move. So that is pretty perfect the way that they're painting this picture. But essentially, if we don't get a big move to the upside soon, this is going to make new lows, and we're going to retest the prior levels of support. And as we break below, which this is not really the most bullish setup, the market should rise. Okay. So that's technically what's being shown on the yields. Okay. Nothing else. Let's take a look at the dollar. All right. So the dollar clearly is having a very strong day today. Big green candle, and the dollar is important to look at because it has an inverse relationship to the market, similar to the yields. So if the dollar is rising, then that is bad for the overall market, and the market should be falling. So recently, we haven't seen that strong of a correlation between the dollar and the overall market. But with a big move like this in the dollar, we could continue up. But what is important is that the dollar is going to start getting very overextended to the upside, according to the Bollinger Band. So if we have another green day, we can easily close and open, etc. outside of the upper level of the Bollinger Band. We can still have some space to continue going, similar to what happened over here. All right, so this looks very, very similar. Back here, okay, we had a big green candle. We were outside of the upper level of the Bollinger Band, but we can continue going up, right? By all means, we can continue going up as long as we don't open outside of the Bollinger Bands. If we do not open, so here's what I'm going to be looking for. If we open outside of the upper level of the Bollinger Band, that is pretty bearish. That's not what you want to see if you're a bull on the dollar. And let me just paint this. So if we open outside of the upper level on the Bollinger Band, if we close, open, get very overextended, right? This happening would be a good indication of somewhat of a bottom in the market, and we could end up going long based off of this extreme strength in the dollar. So we have this prior high here, Let's see if we can end up breaking above that. And we also need to see if we close above the prior wicks from October 26th, and then the highs from October 6th. So yeah, this is not something that we want, especially when the Bollinger Bands are this contracted. The potential for an explosion in either direction is high. That's why we're seeing this big green candle right now. But the continuation of that move is not as sustainable. So just keep that in mind. Some fun things going on with the dollar. This is also not the most bullish, regardless of what's being shown here. In my opinion, this is not really that bullish. Like, this is, you know, we could continue up, but it's not, just the risk reward is not there at the moment. So regardless, you know, we're just going to see how things go day to day. We could continue rising. This is clearly strong, could continue rising. So the dollar, you know, the dollar looks like it's exploding to the upside. The yields are showing a potential move in either direction. So, you know, another basically win for bears right now at the moment based off the dollar. All right, so once again, they're going to be playing around with people's volatility, pay people's premiums. They're going to entice people to go long. Right now, when the VIX is this high and things of this nature, people are going to be selling a lot of options, much more, because the implied volatility is higher. So, you know, the VIX is important to look at because it also has an inverse relationship to the market. When the VIX is rising, that is bad for the overall market. And clearly, once again, guys, this is not a bullish setup to me on the VIX. The VIX should fall, and based off this falling, the market should rise. So that is my thought process on the VIX. All right, so this is a chart of the buying power of the SPX over here, and overlaid on the chart of the SPX. So let me just make this a little easier to see. Okay, so what I like to do is I like to look at when the buying power of the SPX is below 30, what ends up happening when we are overextended on the market. So now the thing is, we can continue falling. By all means, we can continue falling in the short term. But back here, for example, when we were falling below 30, things looked very bearish, right? This was probably the most bearish things got, really, right? With according to the BPSPX. So this remained bearish for almost a month. But down there was not a time to start swinging short for any longer term period of time, right? As you can see, this was very, very bearish. The buying power dropped down to 12. Right now we're at 25. So we could continue falling lower by all means, guys. But just using September as an example. Let's just use September as an example. There's been other examples. Let's just use September. Okay, so we began to fall below 30 over here in this little area right here. Okay, very, very simple. You know, the 20s in September. Big red candle. Cool. As you started to make these lows, if you started to try to short, risky. If you shorted on a bounce, you're hoping for one more move lower. Also risky. And then if you short as it made the low already, risky again. So the first and the third, dumb trade. The second trade, a little better, more aggressive, dumb as well. In my opinion, when things are starting to make bottoms, always have to lean long. Regardless, you always have to lean long. It's just such a bad trader's mistake to try to short when there's weakness already. When there's already a lot of movement to the downside, you cannot start to short. Day trading wise, sure. 1 day hold overnight, sure. But your horizon for the next 2-3 months should be bullish based off of we're gonna see better, hopefully, after FOMC. But if we break below 408, 407 on the SPY, if we hit 400, are you going to start being bearish? If we hit 400? No. I mean, you shouldn't, because if you began, so say for example, this move lower here was 400, right? And then we break below 400 and hit 395, 394. Those should be automatic buying opportunities for 1, 2, 3 months out. The lower we fall, the shorter time frame expiration dates you should be getting. In my opinion, that's how you trade. You scale into your positions as you go lower. And that is the optimal way of capturing the moves, because if you start to short as the weakness is already happening, it's just very dumb. So let's just so that was September. Every other time you could see that whenever we fell below 30, back in March we bounced. I put this on the weekly as well. You could put it on the weekly as well. Back in October we stagnated a bit, we bounced, and now this is not the strongest situation, right? This looks similar to September of last month, where had a bit of a bounce, but then we could make another low. So we could easily make another low in the market overall. By, you know, the dollar is still looking bullish. We have FOMC tomorrow, but just based off of this, I can't even imagine what's going to happen to sentiment once we make another low, because sentiment is already really, really low. So the IWM is super, super low. I think it's at 24. That is showing extreme bearish sentiment. So when we're already at extreme bearish sentiment and we make another low, that new low is going to be a good buying opportunity, in my opinion. So yeah, regardless, we're below 30. Usually, historically, when we're below 30, we end up getting a bounce. So if this can hold, getting calls for 2 months out is the solid play here. We should be rising from here, in my opinion, based off this. Now, when we look at the large tech stocks, let's go ahead and take a look at Apple first and foremost. We're holding support. What I like to do when we are making lows or anything like that, I like to take it from the low, and I like to see how, like, where we're finding support for these moves. So I either take the big candle where price action is happening, or I do it based off of the most recent high. But let's just take it from this candle here. So the 6.8% fib is holding, the 50% fib is holding, and the 38.2% fib is holding. So this is, they're trying to make this as bullish as possible down here at this low. And one of the key takeaways, one of the giveaways, guys, is I wasn't able to make this video, but when Apple opens outside, when any of these large tech stocks open outside of the lower Bollinger Band, guys, you guys know which direction you should be leaning. You should be leaning long, right? Like, time and time again, always lean long when the market is showing extreme overextensions to the downside. It's tougher to lean short when there's a lot of institutional buying power. But when there is institutional weakness, it's easier to go long. So Apple, that was a clear-cut giveaway. Now it's just choppy price action. And the MACDs, just, you could quickly take a look. The MACDs on everything is getting close to crossing above. So choppy inside day on Apple. Nvidia, don't get caught by this. I don't think Nvidia, honestly, I'd be surprised if Nvidia paints a green hammer off of this. I'd be surprised, but I don't think it should. It would be really, I'm not really sure. Like, I think it should fall lower and fill this. I don't think this move to the upside is really something that can continue and then end up being green, but who knows? Maybe, I mean, you know, earnings run up based off of AMD's strength. Who knows? But Nvidia is technically made a new low. It's making a hammer, showing a bit of a reversal. But we have AMD earnings today after hours, so you can't really take this. You have to take this with a grain of salt. Taking a look at AMD, strong. You know, Nvidia is strong based off of AMD's strength. we have earnings on AMD, right? So prior to earnings, there is an earnings run up where price rises in anticipation of earnings release. So AMD is strong for that reason. Let's take a look at Meta. Similar to Apple, inside day. Nothing really too serious here. Netflix, similar situation, doesn't look too bullish. Should be falling. This is not really the most bullish situation. Tesla. This is not really, you could take a long here, but I would rather take it closer to 190 because you would just try to be fighting against you would just be fighting against this downward pressure. So I would normally rather so if you do try to go long, you have to go long with a low of day stop loss. But ideally, I would rather just wait for 190 or 187 was a really important level on Tesla as well. But regardless, yeah, this is pretty nasty price action on Tesla, but this would be the first opportunity you could try to go long below 194 as a stop loss on Tesla. And then let's take a look at Microsoft and Google. Microsoft is not looking good. This is not a bullish setup on Microsoft. And then Google, inside sort of day, we have the Bollinger Band pointed completely lower. We can continue falling lower. And this is not really the reversal that people wanted to see based off of earnings. So this is clearly still weak. We had a big move to the downside on Google. Still clearly very, very weak. But we're holding support. So Google, and then let's take a look at Amazon. Amazon is at the highs, so it's doing pretty well. But Apple, Google, Nvidia, AMD, these stocks are basically holding, and Tesla, these stocks are basically holding at the bottoms, holding support inside days. Amazon is still technically showing strength, and a lot of this has to do with obviously good earnings, but then also the fact that the IWM is getting a lot of love. So the IWM, so Amazon is affected by the IWM. Consumer heavy stocks are in the IWM, and Amazon is one of them. So yeah, the tech stocks don't look terrible. That's my point. We're not seeing extreme weakness. We're seeing we're seeing holds of these large tech stocks. And when that happens, there's usually it's a good case for a continued move in the market, usually. All right, so this is a chart of the SP 500 seasonality. Okay, so you can see that in November, it is on average a 1.8% return with 75% chance that we're bullish. So this is one of the most bullish months. And you could see here in November, it generally has a very strong opening to the month. That's not guaranteed. Seasonality has not been perfect week to week recently. But November and December are both very, very important bullish months. Of course, we have a lot of tumultuous situations internationally. So it's kind of hindering the market and what could be happening. But seasonality wise, the S&P 500 is supposed to be bullish. So if we don't completely capitulate tomorrow based off of FOMC, then and if the tech stocks are holding support, this could help the market move up. Okay, so let's take a look at the chart of the S&P. All right, so number one, this is a chart of the SPX. We reclaimed this downtrend level that was created back in July with multiple touches here, and here. We reclaimed it. We fell below it, but we're now above it. And we are knocking on the door of this 4186 level of resistance. So this is a good situation here. We could maybe get a bit of a pullback, retest, and then continue to move up. So this is technically a bit bullish here. The other thing that I have that is circulating, but also it makes sense, because why would you want higher rates into an election year? So if that is the case, and there shouldn't be higher rates in an election year, then that would mean that the FOMC is going to be dovish. And if the FOMC is going to be dovish, then that is going to be good for the market. You don't want higher rates. You don't want things to be economically burdensome for the population during an election year, or else the party is going to lose. So let's see, essentially. Let's see what goes on. But based off of that logic, the market should be a bit bullish, but it's always tough to dictate which direction FOMC is going to go. But you know, that does make a lot of sense in terms of dovishness and high rates. So the 4186 level on the SPX correlates pretty well with 417, but the exact level is 417.05. And you know, we reclaimed. So number one, guys, we hit 408. Sorry, we hit 409, and you know, if we were to make a new low, that is an automatic area to go long. Over here, as we made these lows here, this was also an automatic area to go long. And you cannot be going short. That is the point. Like, in my opinion, the entire time over here, what was I doing? I was long. You can't be short when there's a pullback. So it is what it is. You have to go long here. If this, I mean, our call's already up, so if whatever, but if it makes a new low, you have to go long again. And that's the way that the cookie crumbles, to be honest. You could try to go short here. By all means, you could be short here as 417, 418 starts on the SPY. You could start leaning short. But that chart that I showed earlier with the BP SPX going short on the first pop upwards, it's risky, but it's, you know, you're supposed to be leaning long. You shouldn't even be setting yourself up for taking a trade like that. But of course, you know, manage your own risk. It's risky. As long as you understand that's risky, you shouldn't be doing that. If you want to, with small position size. But yeah, so we reclaimed the trend line. We held 411. This uptrend line that I'm talking about from back in November of 2022, sorry, with multiple touches, 1, 2, 3. And then this is the fourth. We are holding above it, so that's good. We broke above the trend line, the downtrend line on the SPX, which is good. All of the MACD indicators are also pointed upwards, which should be leading to a cross above on the MACD, which is also good. The NASDAQ inside sort of day, similar to Apple. MACD's moving upwards, which is good. The biggest winner today is the IWM. And that's another reason why we see strength out of Amazon, because the IWM is showing a lot of strength at the moment. And the IWM also reclaimed below this downtrend level. This was creating a falling wedge. The falling wedge failed. We made new lows. And now it looks like it's trying to creep back up. And during November and December, the IWM and the tech stocks do well. So we're going to have to see how tomorrow ends up with the market. Today should be choppy. Tomorrow should also be a bit choppy. I would be very, very careful about day trading like heavily. And I'd be very, very careful about holding anything shorter term without stop losses. So, you know, on Twitter, okay, so on my Twitter, I posted on October 26th, we went long NASDAQ and SPY. And I said that I was going light because I expect a new low first to flush people longing out. Okay, so October 26th, let's see what happened. All right, so this is October 26th. Right here, we went long. And I said that I went light because I was expecting a flush lower. That next day, we flushed lower and we hit 408. So we went long at 412. And based off this bounce here, I said I was going light because this is not going to sustain itself. I knew that it was going to continue. I knew that it was going to continue falling lower. That's exactly what ended up happening. Might have grabbed some extra calls here, but essentially, you know, once again, you cannot be going short, right? So we went long here. We're comfortable. We're doing well. The calls are up 10, 20%. The NASDAQ calls are up 20%. SPY calls are up 10, 15%. So this is, you know, that's the way that the cookie crumbles. You have to go long when things look terrible. And time again, it's been working pretty well. So now, you know, we are comfortably in these longs. We're going to see how the market ends up moving afterward. But I am excited. I am very, very excited to start. And by the way, we've caught the crap out of this bottom on gold. But anyway, that's neither here nor there. What I am excited about is getting back into it. So I'm going to begin live streaming hopefully either tomorrow, 100%, either tomorrow or Thursday to start the new month. And yeah, just going to get back into the daily trade recap videos as well. I know that was very, very helpful for you guys. And yeah, thank you guys for the constant support, the love, all that good stuff. And this is my video for today. I'm going to post another one tomorrow. So hope you guys enjoyed it. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early, either Wednesday or Thursday. All right, take care. Have a good one.